Do you invest in mutual funds? Then this is the single biggest mistake that you should avoid as a wise investor. I am CA Manas Madrecha, founder of Manas Money, a boutique investment firm based in Mumbai, providing finance guidance to professionals like you. What is the single biggest mistake that you can make while investing in mutual funds? Let us see in this video today. The biggest mistake that you can make is panic selling. What is panic selling, you may ask? It is prematurely withdrawing all your funds or redeeming all your units before you have reached your financial goals. If this seems illogical to you, then why do you think people do that? The reason may seem justifiable. They may think that I should sell all my portfolio when the markets are down or when my portfolio is red so that I can at least book my loss until now and further protect my capital. If I sell my portfolio when it is in red, at least I will book my loss until now. However, this thinking has a serious drawback. What you are doing in case of a short-term downfall in market is you are converting your temporary loss into permanent loss. Know that in mutual funds or in equity or in any growth assets that you invest, selling your mutual funds results into booking your nominal loss into realized loss. So what is the solution to this? The solution is that number one, ask yourself, why did you begin this investment and have you reached your goals yet? If not, then just take a deep breath and wait. Number two, is your portfolio currently misaligned as per your risk appetite? Because that's the reason why you may sell your portfolio even if it is down by just 5 to 10%. And number three, you should do your quarterly review of portfolio with your financial advisor so that you can at least see that your asset allocation matches your financial goals as well as your risk appetite. So, what is the one thing that you should avoid while investing in mutual funds? Don't panic sell. Sell your mutual funds when and only when you have reached your goals or when they are misaligned with your asset allocation, either due to high equity allocation or due to high debt allocation. A shrewd investor would always have a balanced mix of both asset classes so that they can have a psychological mental peace even if their portfolio is down by 5 to 10%. Markets are volatile by nature. It is this volatility that helps us get alpha. Else, you will get basic returns of government securities. This market volatility helps you get over and above average returns. Whenever there is a drawdown in your portfolio in the future, you will stay invested and you will stay disciplined. Subscribe to Manas Money for more such advice.